Hello to everyone, my name is Gregor Horvat and welcome to our new update surfing the Elliott waves, where I'll look at some of the most interesting developments for this week. This video has been brought to you by Orbex. Now firstly, let's take a look on euro dollar. As you know, euro dollar remains under bearish pressure, but we are still seeing this market moving towards parity and into this very important 78.6% fib level. Then you have this 0.9 level, which was actually the latest ECB intervention that happened back in 2000. So we will see how this will play out. I still think that this is the multi-year support zone. So if inflation can slow down, then I think that euro dollar could recover. Now, on a short-term basis, we still think that early this week we could see more weakness, as I said, towards parity. So this is the big level down there that we should pay attention on. I'm sure that there are a lot of speculators that are expecting a bounce away from that level. So even if we do not see any strong rise away from here, I still think that there will be some back and forth moves here around this very big important level. Now, when looking at the intraday chart, well, notice that wave 3, which unfolded over the last few days, has a very nice and extended substructure, as you can see here. So I'm expecting more weakness since this wave 3 put the wave 4 in play. Now wave 4 is a corrective flag, and sometimes you will see wave 4 that will find the resistance at the starting point of the wave 4 of one lesser degree, or maybe at the end point. So the starting point was at 101.54, and then you have the upper resistance at 102.20. Okay, so these are two resistance levels from where I am expecting new continuation down. So either from current levels, or even if we see a rally, I still think that it could be just a temporary recovery. So as long as we are trading below invalidation level of 103.83, because we know that wave 4 must not step into the territory of wave 1. So as long as this one holds, trend remains clearly to the downside. However, after that new low, well, as I said, back and forth moves could happen around parity. So I would not be surprised if we see a recovery after 5 waves are finished down, because after all, after every 5 waves down, you would expect a minimum 3 wave rally. So we will see how this will play out, but I think that if German DAX will try to see more gains after recent failure breakdown, then I think that euro dollar could also stabilize. So on the short-term basis regarding the German DAX, well, notice that I can count clearly 5 waves to the downside here. And notice what happened last week. Well, we have moved to a new swing low here. So this was low back from March. We retested these lows, cleared some stops just for a few points, and then market bounces. Notice that this bounce came after an ending diagonal here. So that's a wedge pattern which normally occurs at the end of a higher degree trend. So this higher degree trend is visible down on this chart from here, okay, from 14,700. So 700. So I think that this is a very nice base here, and I would not be surprised to see more upside. It looks like a very nice, attractive, tradable bottom. So I would be looking for a minimum 3 wave recovery, possibly even towards 13,500, which was the area of a previous wave 4. So that would be my minimum upward objection for this week. Also, of course, let's keep an eye on this level here at the previous swing low around 13,200 to be the first resistance possibly. Okay, so once again, if German DAX will continue to see more upside, then I think that euro dollar could really stop at around this parity. Now let's take a look also on crude oil. Well, crude oil on a big scale, well, I still think that we are staying in uptrend here. We can be possibly consolidating now in a wave 4, can be a triangle, can be a flat, but for now I favor idea of a triangle. So it's a just a pose within uptrend. So why I favor the triangle? Well, because notice that if you go to the smaller time frame here on the 4-hour chart, you will see that the drop in this recent lag unfolded in 3 waves. Okay, and more importantly, I've been tracking with members here this potential support here around 95-98 area. More importantly, this support proved to be the very strong one, because we have seen a response away from it. So market rallied. In fact, this rally it's not just regular or corrective rally, it's a 5-wave rally. So notice you have these 5 waves up here. Okay, so this 5-wave structure suggests that we could see more upside as long the market is holding this support at 95.12. That's the August contract. So I'm looking for more upside. We'll be looking for more upside after this ABC setback. The first support, well, let's use some pips here. Just a second. Okay, so the first supports, well, I always try to pay attention to the 38.2%, which is still not being tested, but it's around this wave 4 support, so that's quite good, around 101.50. But then you have this 50 and 61.8%, even more important, that comes in around 100. Okay, so that's a very big level. So watch out for what will happen down here in the next few sessions. If we see a dip and then we rally, then let's say that we see this kind of a structure, you move this into this zone, and then you rally away from that zone back above or towards 103, then I think this would be confirmation and a trigger for more upside. The invalidation level is clearly at 95.12. So if you want confirmation, you want to see this first response away from 100 after retest. If 100 is broken decisively, then obviously you should stay aside. So I think that crude oil short term could see more upside. Longer term, it stays here in consolidation within uptrend. Okay, if suddenly we see a break below 95 support, then the next key level would be this equality here at around $86 per barrel, which is the leg that equals to the first one here measured from 130 highs. Okay, now let's take a look also on gold. Now gold is still, in my opinion, in a very big consolidation phase here, away from 2020 highs. Well, it was just, this market just didn't move to the upside because probably it was just too overcrowded. Back in 2020, everyone expected that this market will explode higher. So simply this is not going to be an easy task, because if something is overcrowded, well, just be aware that the next opposite cycle may occur. The next thing is obviously a very strong US dollar, which is still putting some bearish pressure here on these metals. So I'm tracking this wave for consolidation. We are at the 38.2%, but I would pay attention on to this lower parallel trend line. Notice that this was a breakout here back in 2020 when wave 3 was probably confirmed, because usually this breakout causes a very sharp and explosive move, and usually this is within a third wave. So if that was a wave 3 high, well, then we should expect more upside after a wave 4 consolidation, and usually this wave 4 consolidation will find a support exactly at this trend line. So I'm curious to see what will happen down there. Notice that we can count 5 waves down currently, meaning that it can be a flat correction currently with a wave C. So you have 3 waves down for a wave A, 3 waves rally to a new high or close to a new high here for a wave B, and then a 5-wave drop. So this is a very nice flat correction which can stabilize this metal around this wave A ending point. So 1680, 1700, that's a key support for gold. So still some room for weakness, but then watch out for recovery. And why I'm saying some room for weakness? Well, because if you look closely here on the 4-hour chart, notice that we are observing this breakdown point that occurred at $1810. So from that point, we think that market stepped into wave 5. Okay, so that's your wave 5. But wave 5, again, it's a motive wave, should be structured by 5 subwaves. So before we can say that this market is coming to an end, that it's bottoming, well, we need to see this substructure completed. Okay, but that's not the case yet. So in the short term, I think that more weakness could occur here, potentially, as I said, 1680, which is a multi-month support. So afterwards, just be aware of a rally. Now let's take a look on the final market, which will be the euro pound. Now euro pound higher degree charts, to give you just a quick review of what we have been talking lately. Well, we've been reversing away from that multi-year support, and this reversal came after 5 waves of decline that are visible here on a daily chart. Okay, so that 5 waves of decline suggests that the market is reversing into a 3-wave recovery, minimum 3-wave recovery, because of this broken channel. Notice that this reversal, the first leg, occurred with the wedge pattern or leading diagonal if you want. So this is a very classic but not so common Elliott wave pattern in the first leg, but still it usually suggests that this market will find the momentum and potentially even strong volume when the wave restarts, because it was quite choppy recovery here, so no one expects any major break to the upside, rather to the downside. And usually when everyone are seeing lower prices, again, be aware that the opposite may happen. Okay, so what we are seeing here is an ABC decline. Wave C is moving to the 61.8 to 50%. Very nice FIB support here. You also have this wave 4 that we should pay attention on, around 8400. So if we can rally away from here, and let's say that we see a very nice day or 2 days of a bullish daily candle with a daily close somewhere around 8600, then I think that more upside here could be in the cards, because then this 3-wave drop would be confirmed as finished. But for now, invalidation level clearly remains at the lows, because if we think that that was the starting point, okay, of a new trend, then obviously this should not be overlapped. Okay, so wave B or wave 2 can retrace all the way down to 100%, okay, but not more than that. However, what I've noticed over the past few years when I'm tracking these Elliott wave cycles is that the 78.6% is usually the final very important FIB level where you should see this correction to stabilize. If this one is broken, then I think that's an early indication that probably we are going much lower, because after all, then even this leg, the third leg, could be much more extended and would better fits to wave 3 rather than wave C. Okay, traders, thank you very much for attention. I hope that you enjoyed this video, and talk to you soon. Bye.